talk all about this. Let's bring in James Frischling. He's the co-founder and president of NewOak Capital. So, James, what do you think about that, those developments, maybe a new model for Fannie and Freddie?
I do think it's time to address the fact that the hybrid nature of the GSEs has been a challenging one. There are some conflicting and almost incongruent purposes of these entities. I think the social...
What stuck out to you overall?
At the end of the day, I think there's the political pressure and the need for these agencies to produce mortgages and to finance mortgages. There's also the fact that these are owned by shareholders and therefore maximizing profits is an objective. So these are incongruent goals.
Should we have them at all then?
I think the answer is yes. I think a number of institutions right now are looking at the good bank, bad bank strategy. Others are looking at core, non-core. If it's non-core, you can remove it. You can't remove the mortgage industry, or rather the ability for the government to provide some level of financing from our industry. So with that in mind, we're going to need something. So good bank, bad bank is not a bad way to go.
What do you see the role being, if this is indeed the case, that it's split up this way? What will the role be of the good bank institution in the housing recovery moving forward?
At the end of the day, it's going to require the underwriting and the credit standards, and that's not a clever or unique comment. It's an obvious one. However, there is so much pressure to produce and to lend,
right.
And the political rhetoric is still so high that at the end of the day, unless we actually do look at the good institution and actually address the issues of the credit standards that we're going to be using, I think the fact is then we'd be destined to repeat our mistake.
You know, it's interesting to revisit this comment or this discussion about Fannie Mae and Freddie Mac, which has been largely absent of our discussions on the housing market over the last couple of weeks. We've received some data that's been, you know, depending on which way you look at it, has been showing some signs of recovery in that housing market. Why do you think we haven't actually talked about it more? Can the housing market go ahead and move ahead without a remodeling of this part of the government?
I think while there have been some signs, some positive signs, actually there's also some indicative reports that suggest that there's quite another wave of issues to face this market. I think a lot of private capital remains on the sideline. I think it's there.
Does it need Fannie and Freddie to get back in?
It needs to tone down the political rhetoric, no disrespect, before it re-enters the space. So
I'm getting a mixed message. So do you think it needs to be there for private investors, or do you think it does not?
I think it needs to be there to serve a basic and fundamental purpose. However, then it has to be the private sector has to feel that the rules of the game are set, are fair, and are clear. And right now, I think it's a little unclear. These are very sensitive issues. These are not easy issues. There are people behind every one of these mortgages, and it's so highly sensitive.
You know, thanks for reminding us that. We forget sometimes. We talked about these mortgages. Half of the mortgages are tied back, and it's actually families and people. So, James, appreciate that. We're going to be with you all morning, of course. Great to have you on Fox Business again. We're going to turn to... Let's talk a little bit about this with James Frischling. He's the co-founder and president of NewOak. Interesting, James, in the New York Times today, one of the articles in the business section says a few stocks skyrocket, but why? And mentions AIG's move yesterday. You think that's what it is, a short squeeze for some of these financials?
In terms of the stock price, yes. I think... the stock prices tend to follow the path that causes the most pain, and right now squeezing the shorts is causing the most pain.
And is that across the board, or is AIG just an example of that?
I think actually that's across the board. But yes, AIG is a great example of what's going on there.
It's been interesting to watch the financial sector because in some days that the market has been down, it remains the strongest sector of the S&P. You know, with AIG specifically, it's interesting to see these developments about whether or not the spinoffs are actually going to happen and what it means really for the rest of us, because we have a lot of money invested. The point that the Wall Street Journal makes this morning is that really the breakup fees here are, well, benefiting some firms on Wall Street that we are invested in as well, providing fees because they're underwriting and helping out with these deals. What do you think about that aspect of the story?
I think there's a very tough balancing act, but it's a doable balancing act between the work that needs to get done, and this is by no means easy work, IPOs, spinning off subsidiaries, advising on assets, versus the public outrage that the very people, let's say, that caused or contributed to some of the issues are going to be probably some of the biggest beneficiaries. But the work does need to get done.
You know, it's interesting that we're going to have the report, AIG's report tomorrow, and there's been some criticism of AIG, even in this breakup, that they're just so big that they really push competitors out of the market. What do you think about that criticism?
To a certain extent, AIG was the 800-pound gorilla in their market. I can't think of a single financial institution that wasn't in some way touched by AIG, and to a certain extent, I don't think the breakup is going to make its competitors unhappy. However, while they still have government support, they're still actually a very dangerous competitor because they're playing with house money.
Right, and on that, again, it looks like it's going to be still a long road to see them spin off all the different assets here. James, thank you very much. Appreciate that. Ashley. Well, we've told you about this all morning. A federal judge is blocking a settlement between the Securities and Exchange Commission, the SEC, and Bank of America. Under the agreement, B of A was going to pay $33 million in fines to settle these charges that it misled investors about Merrill Lynch's plans to pay out executive bonuses. So the judge says you can't do that. You can't settle that. We want to hear more about that. And so does James Frischling. He's joining me to talk a little bit about this from NewOak. James, why do you want to hear more about this? Why not just let Bank of America settle and let's move on from here?
I recognize how many people are in the camp of let's put this to bed and move on. At the end of the day, I'm okay with getting some transparency into this situation.
What would you like to hear? What are some of the questions that you want answered?
At the end of the day, I mean, we're talking about $2 and $3 billion differential, and we talk about these numbers as though they're inconsequential. When if you actually think about the magnitude of the dollars, I think it's staggering, and we're losing sight of some of these digits.
Well, and to your point, and to the judge's point as well, of this money, one of the things that they want to look at is how much of that, if at all, was actually TARP money. That's the money that the taxpayers put forward, $45 billion, to support this bank. So do you think that's an important specific that we need to know?
I think that's important. I also think the timing of some of the events is pretty critical. At the end of the day, I think we are upholding contract laws as best we can, in this very difficult time. At the end of the day, I think, the idea that Bank of America might have not disclosed information and violated securities laws, I think at least some information. At the end of the day, the results seem to be good.
It comes back to this conversation that always battles that, though, rhetoric as well, of like, we were stumbling around, politicians and investors alike. We had no idea in this financial storm we were in. We were just trying to do the very best that we could. So maybe it wasn't exactly the right timing, but we were working around the clock.
And that's totally respected. At the end of the day, the ends may justify the means, but it doesn't mean we can't know what happened. And at the end of the day, I'm not tired of this story yet. I enjoyed Mr. Paulson's testimony. I think he's done a heroic job. At the end of the day, I'm not done with the story either, and I think clearly that's what the judge is saying.
And well, we're not done with the story either, James. Thank you for that. We're going to be following this all along. James, you're back with us next hour.
Looking forward.
I appreciate it very much. We're going to talk more about the financials. Also, a big